So am I audible properly, Atisha? Right.
Yes. Yes.
Okay.
Yes, yes, yes. Voice is good.
Good evening, everybody. Let's wait for another 1 or 2 minutes maximum. Then we will start. Afterward, we will start session.
Now, yes.
Okay, let's begin. So good evening once again, and welcome all of you. Next episode of Bazaar Pe Charcha. Before discussion, this is the important thing from us, that disclaimer that whatever we are going to discuss in this webinar should not be considered as a buy or sell recommendation of any particular stock or index or anything, and all information should be considered as a educational purpose only. And we are team of analysts not having any exposure in market. Okay. Now let's move. So this is current market scenario as per O'Neill methodology of market direction. You all must be aware about O'Neill methodology of market direction, that is based on distribution days, moving average breach, and that is divided in 4 parts of market. That is confirmed uptrend, then uptrend under pressure, then correction, and then rally attempt. And if I talk about current market condition, Nifty 50 and Sensex, that is a benchmark index of Indian equities. That is so both index Nifty 50 and Sensex both are trending in rally attempt. That means we are now processing for, as per O'Neill methodology. Now we are in process of forming bottom. Once I'm waiting for follow through day. Follow through day means on any particular day, if market will gain more than 1.7% with higher volume compared to previous day, then that particular day would call as a follow through day, and after that we will move this market status from rally attempt to rally, and then once again this cycle will start rotating rally, then once under pressure on the basis of distribution discount, then correction like that way. Okay. So as per O'Neill methodology, Nifty 50 and Sensex both are in rally attempt. Bank, major sector, which have almost 37% market weightage in Nifty 50 Indian equity market, is in rally attempt. Energy contains Reliance and other key companies, is also in rally attempt. But if I talk about Realty, Pharma, IT, now it has moved into rally, means confirmed trend. And at the same time, other sectoral indices like financial services index and metal and auto is in under pressure. So this is, and if you can check 1 month return, 3-month return over here. So if I talk about the last 3-month point of view, so in last 3 months, this FMCG and auto has given very excellent return, more than 17% return, in both space. But at the same time, if I talk about IT, so in the last 3-month time frame, IT is still giving 22% negative return, and metal, if I talk about, then around 11.5% negative return. So I can say in last 3 months, in short, this FMCG and auto has outperformed, and at the same time, metal, IT, and Realty also, and Pharma also has underperformed. Okay, bank, I can say it was in last 3 months given positive return but not outperformed. It was, I think, in line with market Nifty 50. Okay, now let's move on chart to discuss further on technical perspective, and we will discuss this slide a little bit up after discussing this at least sectors. Okay, so if I talk about Nifty 50, so see Nifty 50 now, once again, if you remember our last Bazaar Pe Charcha, so in that I have clearly mentioned that to me, at least next couple of weeks, market looks like it will remain traded in sideways, and that broad range was 18,000, 18,100, 200 kind of levels in upside, and 16,800, 900 kind of levels I have given in downside. And I have clearly mentioned that in my opinion, most probably market will remain traded in sideways only. One can check my last webinar on YouTube, that is available. Okay, so more or less I can say market has behaved once again as per our expectation. Market formed, I think, a recorded low, recent low, that was around this particular level here, around 17,750 range, 725 range, and afterward now it is moving around 17,400, 400. Okay, even today's high is, I think, around 17,429. And if you check this top from where market started falling, the top was formed around 18,100. So once again, it was in line with expectation in upside, downside. But now technically, this level, that 18,900 was because of trend line that I have already discussed in last month also. This particular, that suppose if market in this trend line connecting 3 dot on top, this particular level here, then here, and then here, and I have drawn trend line, and on the basis of that I have said that from the last 1.5 month market is hovering around this trend line, and not but at this and it tried to give a couple of times breakout about this. But at the same time, last webinar also I have clearly mentioned that in my opinion, I am not expecting that much upside, but yes, 18,100, 200 kind of levels may be there. And there was a decisive fall happened in last week, that was around 17,600 levels, and then it fell around 17,750 kind of level, 16,750 kind of. If I talk about technicals, so technicals momentum, RSI has deteriorated substantially. MACD on daily chart is already trending with this negative crossover in downward slope. If I move on weekly chart, so weekly chart once again is even though MACD is positive here, but if I do little bit detailed analysis of RSI of weekly and monthly chart, so there is a range shift analysis of RSI on the basis of that only I have drawn conclusion that range shift analysis that is introduced in this financial market by Constance Brown, that range shift analysis indicates that now market either most probably will remain traded in sideways only in next few weeks, and on the basis of that only I have drawn conclusion that market will remain traded in sideways. Now what next? From next couple of week perspective, I can say, so still I am expecting sideways kind of range only. Range is now defined, no doubt, redefined, 18,000 to 18,200 kind of, 18,100, 200 kind of levels in upside, and same time this 16,800 kind of levels in downside. And either side, most probably it will remain traded next couple of weeks. Most probably it will remain traded in sideways only in this particular range only. That range is almost 1,200, 1,300 points. and either side breakout may lead market in that particular directions. But in my opinion, once again, I would like to share with you my opinion that I am expecting it is not going to give breakout either side. It is not going to give either side breakout, be it upside or downside. So in my opinion, once again, it will remain traded in sideways. If I talk about this moving average, so moving average last time, if I talk about 200 DMA and 100 DMA, so 100 DMA is still trading below, trending below 200 DMA, 50 DMA above 200 DMA. So placement is not, placement is also itself indicates that sideways kind of move. Today, even today's trading, if I talk about today's trading session, so it took resistance around 50 DMA. I think 50 DMA is placed around this range, current today's highs range. So once it will cross, then some more gain may arise in coming days. Otherwise, most probably I am expecting from next couple of weeks perspective at least, or this particular month perspective, that is October month, most probably it will remain traded in sideways one. And that range is 16,800 in downside, 18,100, 200 kind of levels in upside. Okay, this is my view on Nifty. Now, if I talk about Bank Nifty, Nifty Bank. One second, let me open Nifty Bank. So Nifty Bank, there was, if I talk about today's trading session, so there was a very good session for this sector. There was a resistance in between 39,300 to 500 range. Today it has given gap up opening, and afterward it will remain traded in upward trajectory and successfully closed above this 39,500. Now, if you see from the last 3-4 months, I can say it is comparatively outperforming to market. So I can say that it will move toward in coming few days. It is ready to move toward 40,000 and then followed by 40,500. So if I talk about next couple of weeks perspective, once again till next Bazaar Pe Charcha or this particular month perspective. So if I do component analysis of this financial sector or banking sector, stocks are really looking good, but not all stocks are looking good. Few stocks like Hdfc Bank, Kotak Bank are not doing that much good, but at the same time, Axis Bank, ICICI Bank, SBI, Bank of Baroda, all these are really doing good. Especially heavy bets like SBI, ICICI and SBI is doing good, and that is why I am expecting from next couple of week perspective or this October month perspective, once again that it will remain traded in sideways. This is this banking stock, that is Bank Nifty, and I am expecting, if I talk about range, so range is this recent low, that is the 37,400, 500 kind of levels in downside, and 42,000 kind of levels in upside. If I talk about further upside move, so Nifty has potential. Bank Nifty has potential to gain further from here. So in such case, if it will gain further from here, then I am expecting first target is for 40,000, and afterward 40,500 kind of levels may be achievable. But from this month perspective or next couple of week perspective, most probably it will remain traded in sideways only. Okay, so once again, Nifty and Bank Nifty both to me at least, as per my opinion at least, it looks like it will remain traded in sideways only. Range I have already specified for both sector. Now, apart from Nifty and Bank Nifty, let's move another major sector, that is Nifty IT. See, so there is a clear-cut triple bottom formation happening on this Nifty IT index. This is the daily chart of Nifty IT index. If you see first bottom here, second bottom here, and third bottom here, and today only there is a small beige formation, almost 2-3 week consolidation beige formation breakout happened in today's trading session. So I can say that Nifty, this IT is now ready for some kind of move, and in such particular case, I am expecting first target would be around this 28,500. If I talk about today's closing in IT once again, so after that I can say that today it has a good gain was there in IT space, and there is a triple bottom formation is happening in this IT space. So I can say that it is ready to move further in coming few days, and slowly and gradually it will move toward this at least 28,500 kind of levels. So 20 I can expect 1,000 points kind of gain in coming few weeks, and further once it will cross and hold at 28,500, the next target would be maybe around 29,500 as well. So at least next couple of week perspective, there are a lot of value buying is happening from the last two trading sessions in this space. HCL Tech and other stocks, to me at least HCL Tech is looking quite attractive to me, and other stocks with there are so many other stocks are also looking quite attractive to me. So that is why I'm expecting this some bounce back may happen in this particular major sector, that is IT, and may move toward 28,500 followed by 29,500 levels, or maybe 30,000 kind of levels may be there in a couple of weeks or in this particular month October. Next major sector, that is Nifty Auto. So Nifty Auto, if you remember from the last so many months, we are consistently saying it is in a clear-cut bullish trend. But from the last week onward, it is showing some sideways kind of actions. So, and it was some short-term top formation was happened in this particular index around the 13,300, 400 kind of levels. So now it is clearly indicates that it is in sideways, and most probably next week also, or next to next week also, it will remain traded in sideways. And once it will cross 13,400, 450 kind of levels on decisive closing basis, then I can say that fresh breakout. But now at current juncture, it looks like it will remain traded in sideways and may consolidate in a range bound zone for at least in this particular month. Otherwise, if I talk about this sector, so this sector is well placed because there are a lot of fundamental changes are happening in this sector. Like there was a chip shortage, now it is fully resolved. Now festival season is going on, so demands are quite high, pent-up demands are quite high. The fundamentals are also suggesting very good, a very positive indication for this sector. A lot of people now people are moved. What I am observing, once again, this is my personal observation, that now people are not interested to buy small car where margin was little bit low. Now people are interested to buy SUV or mini SUV or compact SUV kind of, where margin comparatively margin is little bit higher side, at least this manufacturer. So that is why I am expecting this sector will remain in sweet spot in coming few quarters, and it will do well, and gradually it will move toward 15,000. But yes, from short-term perspective, I can say maybe 1 week, 2 week, or 1 month to 1 perspective, now it is in sideways. On the fresh breakout will happen in upside once again if it will cross and hold above 30 kind of levels. Okay, so meanwhile it looks like in sideways, but yes, overall trend is positive. Still it is in sweet spot, so I can say that there are a lot of stocks which may give very good buy or dip strategy to buy or take positions in this particular stock. But yes, once again I would like to reiterate that it may remain traded in sideways in couple of weeks actually.
Yeah, thank you, Pawan. So let me share my screen. Okay, hope everyone can see my screen and
Yes,
my voice is visible.
yes.
Sorry, my voice is audible. Okay, so let us discuss Nifty Metal. So this is a monthly chart of Nifty Metal. So if you see here from the last, this is this latest month, this October candle, and this is the last month's candle. So last month, after 2 consecutive bullish candle, last month it has witnessed some profit booking, and it formed a inverted hammer kind of pattern in the monthly chart. And if you go back to the weekly chart, so it's trading in a sideways range. So once it sharply fall in the area of like from the month of April to July, after the sharp fall, it has already given a very good rise, and after that, once it does that 0.618 kind of resistance level, it has traded in a sideways range near its 50-week moving average, and it's almost does its 0.78% retracement and witnessed some profit booking in the third week of September. So currently it's hovering around its 50-week moving average and making it a consolidation zone over here in the weekly chart. So what we are expecting is this consolidation might continue until it trades above below this level, that is 6,100 level. So once it gives a sustainable trading above 6,100 level, so we might witness another leg of bull run from this. So it may retest its previous all-time high, that is 6,800 levels in coming few weeks. So for that 6,100, it has to cross and hold that level. On the downside, this zone that is 5,000 5,600 5,500 levels, which is also previous low, which made that level. So that is a key level to watch on the downside. So once it breaks below this level, so once again it will move back towards 5,000 level, 4,900 levels in coming few days. So as of now, all the technical daily chart and technical indicators are showing some kind of sideways move. So it might retest this level in the coming few sessions. Also, if you see, there is a bullish golden crossover, which is 200 DMA. 50 DMA is overtaking its 200 DMA. So there is a bullish crossover which is happening. And from last 2 days, if you see, there are almost it has generated around 6% return. So it's kind of bounce back for Nifty Metal. So all the stocks in this Hindalco, JSW Steel, all the stocks are bouncing it back from the lower level. So we might witness it might go to 6,300 level to 300 level in coming few sessions. And the next sector is Nifty Realty. So if you go back to monthly chart, here also it has witnessed a heavy selling pressure. It has lost around 8% in the last month because of this rising interest rate scenario, which is negative for realty sector, which is clearly visible here. And also there are a few things, changes which is happening in reality space is hurting this space. And as of now, this is also after a good run, it has turned into a sideways range. So it's trading in a very broad sideways range. So last time also we have clearly said that this level, that is 470 480 levels, it's crucial level where it has to hold this level to further upside, but it failed to hold above this 470 480 levels, and once again it witnessed the profit booking. So what next? So on the downside, this 400 level will be key support level. That is 410, which is key support level for Nifty Realty. On the upside, this once again 470 480 levels. It has to close above this level for further run in this Nifty Realty. So until then, it kind of sideways range for Nifty Realty. So there is no specific trend in this Nifty Realty as of now. And the next sector is energy. So on the monthly chart, you see it has generated around 8% return in the last month, and made a bearish candle, especially in the third week and fourth week of the last month, September. So this is a level where that is around 25,000 to 26,000 level, which is a crucial level for Nifty Energy, where where it has given a very good breakout here, but failed to hold above this level. And once again, 50 week moving average, where it is given a very good bounce back, but once again made a lower low price formation, that is around 28,000 level. And once again, it touched its 50 DMA as well as this horizontal support line. So right now it has forming a kind of holding this level, that is 25,000 level. But for the what momentum is saying is kind of sideways only. So until it trades above this level, it's kind of sideways move. But once it breaks below this level, so once again it will move back to 22,000 23,000 level. So already So on the upside, this 28,000 is a key level to watch. Once it breaks above this level, so further upside will be we can expect. So until then, it is continue to trade in sideways in the range of 25,000 to 28,000. And the next sector is Nifty Fmcg. So last month it was clearly outperformer, where it has gained despite all the overall bear run in this market. But it didn't fell drastically where other sectors fell. So except Pharma and FMCG, Pharma and FMCG have generated a positive return in the last month. So it is currently trading in a sideways near to its all-time high. So as of now, it's as of it's trading above this 41,000 level, 41,500 level. So we can expect a sideways kind of range move in this FMCG. So there is no sign of weakness, sharp fall in the Nifty FMCG or FMCG. So as of now, it's trading zone is it's kind of predefined, like that is 41,500 to this 45,000 level. So once again 45,000, it gives a very good breakout above, and it may touch this 0.618%, that is 161% retracement, that is 47,200 level in coming few sessions. So but RSI is trending in this range in this weekly chart. So we might expect sideways kind of range in Nifty Fmcg. So kind of there can be a some of the profit booking might happen. So in FMCG, so it is kind of dicey situation where we cannot buy at the higher level. We cannot buy at this current juncture. Better to wait on buy on dip strategy for this Nifty FMCG. And that's about other sector, and Pawan will discuss pharma sectors. Pawan, are you there?
Yes, sorry, it was on.
Okay.
So can you share Nifty Pharma Index?
Yeah, sure.
So if I talk about Pharma Index, so first, as per O'Neill methodology, we have already moved this index, that is Pharma Index, in confirmed uptrend. And Atisa is sharing this Pharma Index. So there is a trend line breakout that was flashed around 13,000. Weekly chart is also suggesting a positive trend. Daily chart is also suggesting positive trend, and monthly chart is showing positivity. So after considering this multi-time frame analysis, I can say that this sector is now gradually moving in positive trajectory after almost 1 year of not downtrend. Then I can say that negative bias trading, or you can consider downtrend also. And from almost 15,000, after touching 15,000 level in the month of October last year, now it fallen to almost 11,700 kind of levels, and afterward now showing positive traction. And there is a trend line breakout on daily weekly chart. Then weekly chart is indicating more positivity. Weekly, if I talk about weekly RSI, so weekly RSI is showing a trend line breakout along with inverted information on RSI. So after considering all these factors, even weekly MACD, even though this placement of weekly MACD is still below central line, zero line, but as its slope is positive and trending with positive crossover on weekly chart. And daily chart, on daily chart, if I talk about, so on daily chart it is already above zero line with positive crossover. So after considering all these factors, I can say that there is a positivity in this space. O'Neill methodology also suggests positivity. So I can say that positivity may remain there in this particular stock in couple of weeks, and most probably it would gradually ready to move toward 13,800 to 14,000 kind of levels in coming. So I can today's close is around 13,190. So from here, if I say 600 to 800 point kinds of level, maybe one chart, 5 to 7% kind of gain may happen in coming couple of weeks or in this particular month. So looks positive to us and positive to me, positive to us, and even stocks are really doing good. I would say few stocks belongs to this particular space. So looking positive, most probably it is ready to move toward 13,800, 14,000 kind of levels in couple of weeks. Last sector, that is Nifty Media. Even though it does not have any major weightage in index, but we try to discuss it in a quickly manner. So this week is showing positivity, and after this week of positivity, I can say there is some more positivity is returning in this. So I can say if it will cross level of this Nifty Media, sorry, 1 second. Media. Okay, I was confused. Okay, so Nifty Media, yes, this week there is a positivity in this particular sectoral index, Nifty Media, and once it will cross 2160, currently it is placed around 2154 around. So once it will cross 2160 and close above this level, 2160 on weekly closing basis, week is going to close on tomorrow, this particular week. So I can say that more it will attract more positivity, and once it will cross above that level, the next target would be further 100 point, another 100 point, that is 2260. So at least 5% kind of gain would be there, and once it will cross 2160, then I can say fresh breakout. So looks positive to me. Maybe it will gain at least 5% gain happen in space and sector in coming couple of weeks. So looking positive. So before moving further query session, I would like to share a PPT. Adisa, can you please share that?
Yeah.
Yes. So PPT, this particular PPT. So this time from the last webinar, we have started a new thing that as per our opinion, what are the sector or what are the stocks are looking attractive to us. And in that continuation of that procedure or that additional information to you, this is the sector we have selected from next couple of week perspective. First is pharma and another is chemical. And we have selected few stocks out of these two sector, and list of all the stocks which are looking attractive or which may do well in weeks is mentioned over here. So one can take screenshot. Can you do it on screen, full screen, so one can take screenshot of all this stuff?
It's already full screen.
So it includes everything, na?
Yes.
All? Okay.
Yes.
Okay. So this is the sector and stocks that looking attractive to us. One can take screenshot and start tracking and start may consider all these stocks for trading purpose in next weeks and next weeks or this in this particular month. Okay. So from sector specific, we have almost completed all sectors and this sectors in stocks in flavor. Now let's move toward query session. I will take one or two query. I have afterward Yatisa is there, then Rahi join this session. I can't because of some reason I can't answer all queries. So Rahi join. They will
I will take care.
Rahi is already there. So let's take one or two query from my side first. Then Rahi and Yatisa will.
Can you take Maruti?
Maruti. Okay. So if I talk about Maruti, the auto, when I was discussing, so as per me, auto index is looking sideways now. So that is why Maruti and Mahindra and TVS, all these Scots are really doing good in current gain of this auto index. So though this auto index is looking sideways, so Maruti is also looking sideways. If I talk about level of breakout, so there is a level of 9100. Meanwhile, it is trading around 8700, 8700. So once it will cross and hold about 9100, then I can say that it will give fresh breakout. And such as we will move for 10,000 kind of levels or maybe far beyond 10,000 also. But yes, from next couple of week perspective or this particular month perspective, now it has entered into sideways. Once it will give breakout about 9100, maybe it would be ready to gain further. Looking sideways to me at least. If I talk about immediate support, so immediate support is placed around in the range of 83, 8400. And most probably it will not fall below that level, no doubt at all. But 83, 8400 levels further. 200 DMA is also, I think, placed in that range only. Let me check. Yes. So 200 DMA is placed around 81, 8200 range. Before that, there is a other indicator, other moving averages also. Even if I talk about 100 DMA, so 100 DMA is placed around 8500. And price structure wise, there is a support around 8300, in between 8300, 8400. So most probably it will not fall, or if it will fall, so there are multiple supports are there. And overall, I would like to say that it will remain trended in sideways in next couple of weeks. So Rai, Yatisa, are you ready to take? Hello.
Yeah. Already.
I will take.
Please. Okay, please. Yatisa, please continue.
Let us move on to Rites and Deep Industries. So Rites, it has already gave up a very good return. Even we are tracking this, especially this kind of heavy engineering stocks, which has given a very good run. And our Rites has given a very good breakout over here. That is somewhere around 300 level. So it kind of tight pattern also, and also a flag pattern. So the very good return, and it has clearly given a good run over here, and it's almost 25% from the pivot level. So what we have to do right now? So those who bought this stock much earlier, some kind of this level, one can hold this, and one can book a partial profit, which is somewhere around 50% of that position, and hold the stock with the until it's showing its any kind of negative signs. Also, if you observe from last 3 days, it's kind of tad from the run, where it is forming a reversal pattern over here from last 3 days. So better to book partial profit and hold back some of the shares. And if it stock runs from here, that will give a very good return. And if it is falling from that level, higher level, so will be under the safer side. So it is better not to enter right now. It is kind of came into the profit booking zone. Okay. So the next one is Rahi. Can you?
Yeah. Please stop sharing your screen, Yatish. I will share mine now.
No. Can you tell me the names?
Okay.
Quickly.
Okay. I got it. So take lemon tree. Yeah.
Okay. So lemon tree also, which is hotel stocks. Once again, it's gaining from despite market has been falling. So this those who are holding this stock, one can hold this stock until it's showing any kind of weakness. So until right now there is no kind of weakness in this lemon tree hotel. So one can keep the stop loss around aggressive investor can keep it is somewhere around 21 DMA, where it has given a very good run, and it also retested this level. And some of them can also keep somewhere around 80 rupees as a stop loss for lemon tree hotel. So right now there is no fresh buy at this level. So those who are bought much earlier can hold this stock for continue its bull run. Next one is
sale. No, first delete that.
So sale from even when we are discussing metal. So from last 2-3 days, it has given a bounce back. Kind of from last 2 days, it has given a 6% return. So after this sharp fall, it has given a bounce back. So from right now, it is not better not to buy this at this level. Kind of a reversal pattern was formed somewhere on September 30th. So which is also a tight range, 3-4 days tight range, and very good bullish candle over here. So that time we can keep a stop loss around 72 rupees and ride this rally for the target of 85 kind of level. But as of now, there is no fresh entry. Also, if you observe here, there is a 200 DMA where it has given a kind of reversal from here. So one can, if someone bought somewhere here, so 200 DMA can be keep it as a target as of now. Also this level, which is 25 level, which might take a few hurdle over here, which is also if you see, one second. Which is also this level. So if I mark this horizontal line where it has given a reversal from there and it has given a breakout here, so it's kind of point of polarity where so this is a level where is crucial for Nifty for the sale. And next one is
GRSE.
This is also a defense stock, which is very good run up. So those who are bought at pivot level, those who can wait this stock to there is no weakness for this stock. So one can keep a stop loss of somewhere around first level will be 362, which is this breakout level. That is this consolidation level, 362 to 340 level. This is a very crucial level for GRSE. Once it breaks below this, for 50 DMA will be the next sub key level for GRSE. So until then, one can ride this rally or ride this trend for the further upside. And the
Apar industry, APR.
Apar Industries. So yesterday it has given a very good breakout. If you see this level, so it has given a very good breakout from this pennant pattern. So it's somewhere around 1350, 1360 level. It has given a very good breakout. And also from this 50 DMA is a crucial where it has bounced back from that level. So those who are bought at this level, one can ride this rally for the stop loss of immediate aggressive stop loss will be this breakout level. So once it break out this 50 DMA, that is somewhere around 50 DMA or 1180 kind of level is the stop loss for them. So one can ride this rally. If someone wants to enter here, wait for the pullback trade where once again it might retest this breakout level. So once it breakout level and wait for another bullish candle, and they can re-enter here at for this stock in Apar Industries. So there is the overall stock sentiment is bullish, so there is no weakness in this stock. Those who are bought can hold this stop loss with the 1200 kind of stop loss in their portfolio. Can you take a few queries?
Yeah, please. Please stop sharing your screen. Just 1 second. So someone was asking about Raymond, I guess. Yeah. So my screen is okay, Yatisha?
Yes.
Okay, good. Okay. So this is a daily chart of Raymond, and you can see that the stock is actually trying to give breakout, and the pattern is cup with handle pattern, and after and at the same time it has also got support around its 21 DMA. From that level it has tried to show its resilience, and it is trying to move upside. If you'll see the three trading session of this stock, the move was actually great, because if you look at the volume part, it is also amazing. So I think the stock is ready for the breakout, but the breakout is still 5% away from this level. So I think one can enter now also, and we need to take the stop loss as stop loss around 1060 or 1050 would be fine. or if you want to wait for a fresh breakout so that it can break the pivot level, which is placed around 1184, then that is also fine. So overall, the sentiment of the stock is good, and the negativity is whatever the negativity it has shown in the past few trading session, and that also that also I don't know which date. Where is the date? My date is not showing. Okay, from September 20 to September 28, the stock has actually in the consolidation phase, and after that it has actually trying to move upside. So I think this upside phase is still not intact, and it is actually trying to move in the upward direction. So overall sentiment of this stock Raymond is good, and I think one can take position in this stock, obviously with the stop loss of 1050 or 1060. Yeah.
Can you take is action construction?
Oh,
AC is not ACC.
Okay, AC construction. So the recently the stock has hit the high at 319.80, and after hitting the high of 319.80, or you can say that 320 on to 12th of September, it has actually it has witnessed profit booking in this particular stock. And after that, looks like the profit booking was little bit slow down till 20th of September, and then the stock is again trying to move upside. So I think the stock is in the rising phase now, and from the if you look at the trading session of the past 1 week, I think it is more than 1 week, almost 8 to 9 days, I think it looks like. So there is every day it is trying to move upside, and there is no red sign here, or there is no negative close from past 8 days. So overall sentiment of this stock has improved in this past 1 week, and I think this upside move is still not intact so far, because 8 days of monitoring the stock is really good. But what would be the stop loss for this? So that is a point. So I think in this case, I think we can take a stop loss of 265. So once this level is breached, like if you look at this flat, the 4 days of flat base that it has made here, very tight range, if that level is breached, then obviously we need to be out from this stock. Otherwise the stock is looking good, there is no weakness so far. Next, Atisha.
Next one is Deep Industries.
Deep industry.
Yeah.
Okay, great. The stock has actually broke out, and it is only 3% away from the pivot level. If you look at the volume is above average, great volume, and I think it is right time to enter in this stock. But when to be out from such type of stocks once it has broken out? So obviously if the stock has failed breakout, and if it has witnessed profit booking in the stock, or we can say that William O'Neill formula, or William O'Neill strategy of 6 to 8% stop loss, that has to be followed if you are buying the stock which is having the breakout like this. So this stock is actually great, and it is looking good. Yeah. Next, Atisha.
Next one is CDSL.
CDSL. CDSL, after hitting its recent high at 1451, I guess, yeah, 1452 we can say, and that was on 8th of September. The stock has seen profit booking, and it has actually fall this much extent, and it has hit the low at 1211. But after hitting the 1211, where it is where 50 DMA was also placed, the stock has actually tried to move upside and reclaimed its 50 DMA on the same day itself. And then if you look at the 3 trading session, it is actually good. But we can see here like 200 DMA is just 2.5%. No, it is 3.18% away from this level. So I think once this 200 DMA is reclaimed, or we can say that it is placed at 1317. So 1320 would be the 20 would be the right price to enter in this stock. And once this level is being sustained and retained for a longer time, and if it is trying to move upside, then it is great. But after 1 or 2 days, again same volatility, if it is observed, if observation of same volatility in the stock, and the stock is trying to breach again its 200 DMA, then obviously that will be your stop loss, and one can be out from this stock. Because right now the market is so volatile that we cannot rely on any stock for longer period of time. Because once we are buying any stocks, and after 4 days or 5 days, we are having a handsome gain of around 10 to 15%. And then if you will wait for this correction phase, then what will happen? Ultimately, the entire profit will be actually erased. So why to erase the profit? If you are having a very good return in few days, then try to take the profit and be out from the stock. And again, if opportunity will become, then again we can enter in the same stock. Not a problem. Yeah. Next one.
Next one is I will take a few queries. Like there is a common query like, sir, when will we add the stock to model portfolio? So clearly, it's right now market is in limbo stage where market is in rally attempt. So it is not a confirm uptrend where market is has given a clear breakout. So when the market doesn't give a clear breakout, obviously general stocks are tend to lose its momentum. We might witness failed breakouts over there. That is a general characteristic of a bear market where market doesn't gives a false breakout and comes back hit our SL. So we'll be out from the with capital loss. So at this current juncture, better to manage our risk. That is a key thing over here. So once the market is in confirm uptrend, or where all the stocks are coming back to the basis, giving a pivot breakout, coming back to the longer moving averages, that is 50 and 200 DMA. So if you see the majority of the stocks except banking, majority of the stocks are still trading downtrend. So still that has to be covered. So once it gives a proper breakout market, so once again we'll be adding the more stocks in our model portfolio. So that is a one thing. And let us move back to the query question and answer. So
yeah. Aarthi industry, would you like to take, or
yeah,
I should?
Yeah, I will take it.
Aarthi industry, right?
So I'll share my screen.
And I mentioned the stock as well.
No, I'll share my screen.
Okay, great.
Okay, Aarthi Industries. So Aarthi Industries, once again, if you see here, this is a chemical stock. With this stock, this is already trading in below its all key moving averages. It's trading below 50 and 200 DMA. So we might witness some bounce back towards its 200 DMA. So that is a minor possibility. So better to avoid these kind of setups where pullback trades are generally risky in this current market situation. So those who want to take the risk position, the one can keep a stop loss around 730 and take the try this rally for the first target of 200 DMA. Then next one is this prior breakout level, that is 940 level. That is about Aarthi Industries. So fresh entry will be kind of avoided in this Aarthi Industries as of now. Next one is
Yatisha, please take Sapphire food.
Wait, let's go back to the order. JB Chemicals, we have missed it. So let us go back to the order. So JB Chemicals also kind of lifetime stocks where we have already added Aries and Jubilant Engravia in our portfolio for the disclaimer part. So this is also a kind of a stock where Pharma stock, which is given a very good breakout over here. That is around somewhere around 1939, 1940 levels. So currently it is trading at all-time near its all-time high. So on the daily chart also, it has given a very good breakout and currently holds above that level, which is one second. So that is a key positive. Also, one can keep a stop loss around this trend line, where this is the one, this trend line. One can keep a stop loss around this level for the for the aggressive investor. One can keep the stop loss around 1900 level, and the major stop loss will be somewhere around 1850 level. So break below this level, one can exit this stop. As of now, there one can take a fresh position somewhere around 1950 1960 levels. That is somewhere around 10 rupees below the CMP. One can take a fresh entry and ride this rally for the next uptrend. Next one is TCI. So TCI also it's trading in this horizontal line, where this is a level where it is trading in a broad consolidation zones from last December, actually from last November. Actually, it is trading in this broad zone. So once it breaks out above this level, the further upside will start. So until then, it has given a multiple buy signals over here, where all the if you see the bullish candles over here, all the bullish candles are given a very good opportunity buy signals over here. One can keep us close track on this TCI, where once it breaks and sustains above this 800 level, ride this rally for the further upside. So stop loss will be a bit tricky over here, which is somewhere around 750 will be 750 will be the first stop loss. So for the aggressive investor, so one can keep a stop loss somewhere around this trend line, where which connects this line. So that is comes around 200 DMA also, somewhere close to the 200 DMA. So that can be your next stop loss level for transport TCI. So one can keep a close watch in this particular stock for the very good return for the coming few weeks. Next one is
Bharati Airtel.
okay. Okay, Bharati Airtel from last 2 days, it's almost trading in near lifetime highs. So it's somewhere around 780 levels. It has given a very good breakout in the last week. So currently it is trading in sideways range. By weekly chart, it has given a very good breakout. That is somewhere around this level, 780, 800 levels. So currently it has retesting this level, breakout level. So those who are bought at this low level, one can keep a tight stop loss around and somewhere around this level, that is swing low. So that is around 750, 760 levels. So one can keep a stop loss of this and continue to hold this stock. Once it give a clear cut bullish candle over here, and it might continue its run for the further few days, for the few weeks. So there is no problem as of now. This stock for the last 2-3 days, it's witnessing some profit booking at a higher level, which is quite common. It's fine. But the one more thing I observed is the momentum, which is kind of lagging right now. So that is kind of little bit concern in Bharati Airtel. But just watch the price action for next couple of days, where if it witness a further weakness, then one can book, one can exit from this stock. Okay, so next one is
Okay, just 1 second. Hdfc.
So Hdfc is continue to trade in this broad consolidation zone, where it has given a kind of hovering around this level. So it is kind of this level, which is at 50 DMA and 2390, 2400. This level is a crucial level. Once it closes, once it nears its this level, can be some profit booking can be witnessed. So for the fresh breakout, this level, that is 2500, is a key level for the further upside. And the downside will be this bullish engulfing candle which is formed on 30th September. So one can keep us those who want to take a small risky trade kind of situation, where one can keep a stop loss of this candle and ride this rally. So risk reward ratio at current price doesn't suit over here. So better to wait for pullback, another kind of 2200 kind of level, 2290 kind of level we can expect. So one can take a fresh entry over here and ride this rally towards 2400. So kind of small trade where 2-3% of stop loss is expected in this Hdfc.
Right. So I'm taking some of the.
Okay.
Okay. One guy is asking about Sapphire Food. So this is IPO stock, obviously, and the stock has actually broke out after 147 days of consolidation phase, which is actually 21 weeks. So it is a really long consolidation phase, but the stock has also broke out, and it is just 1% away, 1% away from the pivot level. From the pivot level, it is 1%. It has gained actually. And but the one thing that I'm observing here is in today's session only itself, it has actually went up to 1574, and then it has closed to 1500. So almost it has lost 4% or 3.5% from the day's high. And then we need to watch for the next trading session how it is going to behave. And once it is actually trying to show some profit booking, in that case obviously we need to wait and watch for this, and we can take in our watch list. And if we can see that a stock is actually trying to move upside, then I think a fresh position can be initiated in this. So this is about Sapphire, and the next one was data pattern, right? Data pattern. So this is also IPO stocks, and then the stock has actually broke out after 90 days of consolidation. So it is also like 14 to 15 weeks of consolidation, and then the stock has actually broke out. But this, and the main difference between data pattern and Sapphire was that Sapphire has actually gained only 1% from the pivot level, and this stock has actually gained around 29% from the pivot level in 27 days. So looks a little bit extended once we have bought it from the pivot level. It is the right time to enter, but a stop loss as of now we can take it as a
Yes. I guess Rai is disconnected, so let me share data patterns from there where he has left. So data patterns, which has given a very good breakout. Also, if you see in the market Smith chart, so it has given a very good once it break out this IPO base, which I like the most, where IPO base breakout done generally, which gives a very good return. So which has generated almost from the lower level. It's first stage of breakout which happened somewhere around this level on July. So after that, it has given very good run, and then it's almost generated around from the pivot 36%. So as of now, once again today it has given a very good bullish candle and closed almost day's high. Also, if you observe the bullish candle, which is volume which is coming to this stock, and also observe the lower volume, which is kind of positivity. Except EPS strength, which is obviously the IPO stocks generally will have a one can ignore this part EPS for the time being. So once they will the valuation is quite high when they initially listed, so one can ignore this part. So all these other parameters, price trend, buyer demand, group rank, everything is fine in this stock. So as of now, what we can do is it's almost 7% high today in today's closing session. So one can wait for some kind of pullback towards this somewhere around 1,150 kind of level. So somewhere around 50 rupees down from that level. So one can take a stop loss of 1,070 and ride this rally. Okay, so that is a trade setup, ideal trade setup will be. But those who want to take at current CMB, it is kind of stop loss will be a bit deeper, which is exactly 1,070 will be the stop loss. Which is quite deep, somewhere around 10 on more than 10% to 12%. So better to wait for some one or two trading session where we might once it comes back to that exact pivot range this level, so one can take a fresh entry from there. So at CMP it's not recommended to buy because of risk reward ratio doesn't sit in our favor. And let us move on to Renuka Sugar.
Yeah, I am back. Actually,
Okay.
there was internet issue. Yeah.
Okay, I'll continue to trade. So
Okay.
Renuka Sugar, which has given a very good breakout in this level, which is on September 20. After that, it is trading in a sideways range. One can take a fresh position over here. Once if it is a breakout from 62 level, then it's a very good breakout in Renuka. So one can keep a close track where I have suggested TCI, similar kind of setup over here also. So there is no problem with this stock. So one can keep a stop loss of this pivot this horizontal level, that is around 55 rupees. So that is around 50. Sorry, I'm sorry, 54 rupees. So that is also somewhere around close to 50 DMA. Okay, so one can keep a stop loss of 50 DMA and ride this rally. So today it has given right now it's trading in a sideways range, but once it gives a close above this 61-62 level, so we can expect a very good run in this Renuka Sugars. Renuka Sugars, even Praj Industries, which has gained today, that is also a very good stock, but today it has given a very good breakout here. So there, I think there is a one more query regarding Praj Industries. So here there will be a stop loss will be little tricky for the fresh entry. So those who are bought somewhere around 420, 410, 420, for them it is kind of it's kind of very easy. But those who are missed the breakout, so now it's a bit tricky for the stop loss. So today it has already generated around 7%. So at current juncture, there are two setups can be taken. One can take this bullish breakout level as a stop loss, that's breakout level low as a stop loss, which comes around somewhere around 7%, but which is not kind of ideal situation. But those who doesn't want to miss this rally, then those who can take the risk, then take the risk with the stop loss of this. And the ideal stop loss will be somewhere around 376 kind of that is this low, that is kind of 370, 389 kind of level. So that is an ideal kind of stop loss for this Praj Industries. Okay, so also if you observe, this RS blue dot is coming and everything is fine with this stock. So there is a bullish setup in Praj Industries as well. Next one is Balrampur Chini. So one more sugar stock. So this is clearly underperforming right now. So one can avoid this stock as of now. But if you see, there is a bottom has been taking bottom has been making it like that is somewhere around 330 levels. So once it comes back to 330 level, there is a bounce back. 330 level one, there is a bounce back, and now it's currently placing making a low higher low higher higher high higher low price structure. But clearly it is on the price action side. Once it breaks out above this, if I mark a trend line over here from this high to this high, so that will come somewhere around this level, that is 360 level. So once it breaks out this level, the next hurdle will be 200 DMA, where it has given a resistance in the earlier stage. So that is around 400 level we might expect. Once it breaks out and sustainable trades above this level, we might expect this 3470 kind of level in the next few days. So as of now, we one can avoid this stock for the fresh entry. But someone still wants to take a risk, and in this stock, 330 will be the ideal stop loss, where it has given made up bottom over here for the 3-4 times. And so let us take a key few stocks where we will wind up the session. So let us take Z and SRF for the final. So Z has given today, it has given a very good breakout with gap up. So they were from this level to this level, which has given a breakout level. It has given a very good breakout. One can keep a stop loss of somewhere around this low, that is 250 kind of level as a can keep the stop loss, which comes to somewhere around 8 to 10%. So it's a bit high. On the downside, risk is much more. But the one more thing is it's retaking its 200 DMA, and there is a bullish positive crossover which is happening. So that is a key level. But also, if you observe here, which is also last time also it has happened over here, but failed to hold that. But this time it has given a very good after tight consolidation, and there is a news also Z Sony merger. So that is also adding that thing, that potential list in this for the Z. So also, if you observe, the volume is today's volume is much higher because of news based. So one can track it for the next couple of sessions. So once it comes back towards this 270 kind of level, one can take a fresh entry with the stop loss of 250 kind of level. So that is about Z. And the last one is SR. So SRF, after this is consolidating from last October, so it's almost 12 months. So it's from last 12 months, it has not generated any return. But on the weekly chart, there is no problem with this. So there is clear cut. This chemical space is very good. SRF is kind of leader in this in those parameter. So as of now, it is given after the pivot breakout is made up a run, but failed to hold back that level, and right now it's made to 200 DMA. So those who want to take a risk, those who want to take a risk can keep a stop loss around 200 DMA and ride this rally. Okay, so for the further upside. So the momentum has been kind of let me check, confirm with this. So momentum is picking up from the lower level. So one can keep a immediate target of 28,000, 2850 kind of level with the stop loss of 200 DMA. Okay, so that's it from our side for the today's Bazaar Pe Charcha. Thank you for joining this session. Thank you, and everyone.